Hello, Anubhav. How are you?
Thank you, Puru.
Thank you, everyone, for another Q&A session and the live session for I Love Property. Today, I've got Anubhav with me, of course, my friend and founder and CEO of Find My Real Estate, for those who don't know him yet. And I'm partner in the business with him. So today's topic is more about market trends. We haven't done it for a while, and we'll deep dive a little bit more into the impacts of US tariffs and Aussie Australian property market, and to really look at what's really driving the market. So Anubhav, let's try to scratch a bit of your brain and see how you are seeing the markets shaping up. We haven't looked at the trends for a while. So there was one interest rate cut and one hold.
Yeah.
So over to you. How do you see the overall market shaping up? I am seeing a lot of phones ringing with brokers, and also lately I've been getting a lot of calls from investors and home buyers to really get a sense on how the markets are in different states and what's the right time for them to get into the markets.
Yeah, good. Thank you, Puru. So I guess it's never what's the right time. Every time is the right time if you're in this for the long term. But I guess just to get a bit of a micro view on it of exactly what's going on. I think with the rate cut that we had in February, March was sorry in February and then March there was no RBA meeting, but in April they've come back and put things on hold because I believe because of global uncertainty that they were anticipating through whatever is going on in the US right now. So we'll cover that a little bit more in depth a bit later. But the sentiments of the buyers are sort of strong at this stage. And they are looking to obviously continuing to invest, and home buyers are pretty active right now with a lot of incentives that are out there through state and federal government to allow people to buy. There is an acute shortage of homes at the moment that we know of. So I think both federal and state government are, battling around how to actually fix that problem. So we know that in Melbourne, they're looking to build high rises and townhouses to be able to combat some of that supply issue that we have. Um,
Yep.
and, uh, and that's sort of on the cards at this stage. So overall, across the country at the moment, there was a bit of a slowdown in the very first quarter of this year. The rate of growth has slowed down a little bit in Perth, Queensland, and also South Australia, whilst markets like New South Wales and Victoria, which has been predominantly a bit negative over the last 6 months, is starting to sort of come back and pick up. At this stage, as far as all other states are concerned, we are seeing Victoria is now very well positioned for growth, and it has bottomed out over the last 2 to 3 years as there's nothing has happened. And the primary reason for that is it has become a state where the prices are a lot more affordable for people to live, and it also gives them a very well-rounded career opportunities for people to choose for Melbourne to be the place to live. And it doesn't have to be just Melbourne. I'm also referring to regional markets within Victoria that are sort of starting to pick up pretty well
Yep.
right
And I
now.
was about to
So
ask that, yes.
yes, so the market activity has started to rise. We are seeing people are putting properties in auction right now. There are more buyers turning up to auction at this stage in the metro, as well as I'm talking properties even for there's a bite on properties within the range of 1.2 to 1.5 million on home buying, but I think the 700 to $1 million is a lot more favorable at this stage. There are home buyers that are active that are still looking at deals under 600K on the outer areas of Melbourne. So that's really good. A lot of investments we are seeing is flowing in from New South Wales into Victoria. There are people, moving from New South Wales to Victoria as well due to affordability that we have spoken to a few of them, and we've sort of we get a sense of that. But overall, I think, because Victoria hasn't had a bit of a chance to really get going over the last 2.5 years, whilst other states have been screaming over the lungs, I think it's time for Victoria to do its magic. And everything is lined up correctly because we've got federal election coming up next month as well. So with that federal election, I do believe that both parties have actually got enough interest in Victoria to continue the infrastructure builds that have put on hold once we had the previous premier Dan Andrews, who left all of a sudden. So big builds were put on hold, and now both parties have vouched at federal level to be able to invest in Victoria billions of dollars to continue that. Of course, it is quite political at this stage, but if those parties tend to, whichever party wins next month, if they tend to fulfill their promises, then I think the acceleration and the growth for Victoria is certain as far as property market is concerned.
Excellent, excellent. And what similarities are you seeing from the pre-COVID to the COVID and post-COVID time periods um, in the markets right now, from from a growth perspective and the affordability of home buyers? Because I know that a lot of them are moving from Sydney, uh, but at the same time, I'm already seeing days in markets are reducing, and also vendor discounting is reducing, and also auctions are coming up. So it's a lot of mixed bag sort of market where people are having a perception of really getting something before it goes on market. But really, when I look at different different suburbs, more and more of these trends are becoming clearer.
Yeah, look, I mean, I guess overall, I guess we talked about the timeframes with before pre-COVID, COVID, and after COVID right now. I think most of the markets are actually already on, making new highs at this stage. So a lot of people skeptical about investing in the same markets that have gone up significantly, 30, 40, 50% since COVID. We had a great run in COVID for many of the markets, with the range of growth of close to around 15% on an average to even 25, 30% in other states like South Australia and Queensland. And of course, Perth was been a runner over the last 2 years, and the highest growth that we have seen in Perth over the last 2 years. So that's phenomenal. But what that's also done is at the same time, these growths have peaked the areas at this point in time. So people are skeptical, and actually they don't know how long the growth is going to continue lasting in those areas. But the fundamental approach doesn't change. See, the thing is that this country, the whole premise of the property going up over these many years is, and I'm talking the last, maybe even for that matter, the last 50 years as well, if you take that into consideration, broadly speaking, property market is continuing to go up. That's because of the underlying factor is the population. So as long as we keep getting the right levels of migrations in this country, property will always be a winner overall. But at this stage, of course, there is a bit of an economic uncertainty that has started to spin up because of whatever is happening in the US and Trump's coming with the US tariffs, which we'll talk. But I think locally, people still need a place to live. People are moving in real time. People need rental places to live. So we have real challenges on cards right now as far as supply is concerned in the right areas, which are being addressed both politically and to see what governments can do. But I think more importantly, as far as if someone is an investor right now, there are plenty of opportunities in the right market right now. And if you're a home buyer, this is really the time to seize your opportunity, the way we see it over the next at least 12 months and 12 months, 24 months.
Excellent. And I'll touch a point on a little bit of what you explained to go a bit deeper into it. And that comes very often in conversations. What is the ceiling of the growth? And you mentioned that in last 50 years, it has only gone up. Now, people are very much used to looking at charts, etc., but they forget that they are comparing it to share market. And I think that's where they are fundamentally wrong. So if you want to throw a bit of light on that aspect as well.
Yeah, absolutely. Look, I mean, share market is, stock market is quite different. It reacts immediately to anything that's negative or positive. So, this is why you can almost on daily basis track that. And, if you look at crypto for that matter, you're talking in seconds, the markets can change. So it's quite volatile. But with property, it takes time for anything to, for it to absorb, whether it's negative or positive, it takes time for property to move in that direction. So whatever is going on right now with stock market, with almost a bloodbath out there, right? Billions and billions of dollars have been wiped out of the markets right now across the globe because of the US tariff that's been introduced. I believe that it's not how property works in Australia. It takes time for property to, take some of that, heat, whether it's negative or positive, and turn that into any numbers that are whether favorable or not. I think the fact that this is happening, it actually means that it only, highlights the uncertainty period right now in people's mind,
Mm.
and that can
Yep.
sort of kick off a bit of a fear at the human level. But
Mm.
the fundamental approach, if you look at it, there's plenty of investments going out there from government to be able to continue to keep spinning the right infrastructure that's required. There are jobs out there that are required to build the homes that are needed, and there are real people who are moving in this country. I think the data as of September last year still had about, I think, 450,000 people that came in the country, which
That's
is
absolutely the
quite
reality. Yep.
significant.
Yes.
So the reality is that in any calendar year right now, on average, if there are even more than 500,000 people coming in this country, they need place to live and they need place to rent.
Sure. And what's the, because when I look at stock markets, one of the natural question comes is maybe it's temporary, but again, these are the private companies who are going down in value. So how do you see that's impacting the sentiment and also the unemployment rates,
Yeah.
which may convert into a investor sentiment as well?
Yeah, look, the fear is real, right? And
Mm.
if you've been tracking me on Facebook, I have been trying to put some posts out there. What does that mean? What do people think about is the recession on board right now, around the corner, or is it actually people are confident about buying? So some see it as an opportunity, others will go into the fear mode. And where the human mind is and how we operate normally is that, when there is obviously risk, and you can certainly see people talking about it. News media is flashing it all over the place right now with so much bloodbath in stock market. There is a word of caution out there for people, and of course that anything that's uncertain will put people into that zone of let's wait and see what happens. So, but been through GFC, I've been through COVID right now. I've been in 21 years in Melbourne. We've seen the markets in and out, and what we know of is that uh, we are we are a country where governments, all layers of governments, are quite deeply rooted with property. It is a $11.5 trillion market overall. It is the biggest, three times probably bigger than your ASX and also superannuation. So I cannot see this going into anywhere close to, a lot of people talk about is there going to be a crash in property? Well, there's no word called crash in property. I haven't seen it in 21 years. So yes, there might be a small correction, but then when it comes to property, you don't even see the correction unless you were borrowing for equity. But we are still going strong and buying properties for someone who sees this as an opportunity, even in this current market conditions.
That's so true. I also want to touch point on the relative growth aspects of regional towns whenever the median prices of the metro towns grow, because that's another important concept. I think it's worth discussing that
Yeah,
due to that the ceiling is never the ceiling, it's just always waiting for the next ceiling, to your
yeah.
point of the property market only goes up. So if you want to highlight that as well.
Yeah. Look, I mean, a lot of people think metro, regional, regional is always going to, not grow as much as metro does. But I mean, I think there's a fine line between what's metro and what's regional. When we're talking regional, in people are saying the word regional, but they're actually thinking rural in their mind. And there's a difference in rural and regional as well, right?
True.
Regional are really just remote areas, but they are city in their own right, which have their own GDP attached to it. There's an economic growth, which is quite independent to the main cities of any state. So
Yep.
these are bigger, larger cities. So, as an example, in Victoria, Ballarat, Bendigo, Geelong are all regional. Pakenham is regional, but in no form or shape they're actually at all impacted with what happens in Melbourne as a suburb or in area as such. They have their own independent markets. So, therefore, it's quite difficult for people to digest this fact. And if you look at the latest data from CoreLogic that was published quite openly, you will find that all regional markets of every single state over the last 3 months, or even for that matter 6 months, regionals, or even 12 months, if you compare that as rolling data, regionals are either equivalent or even higher at this stage as far as the rate of growth is concerned. Talking about ceilings, I mean, I think regionals have had seen new highs right now in every good major regional areas, especially in states like Queensland, South Australia, and Perth. And what that actually means is that if there is enough demand right now in those right suburbs of those areas, which is, if you can measure that through the right leading indicators that we normally look at for our clients, and if there is a fundamental right reasons for people to continue to live in that area, then there is no reason why it would go backwards. It'll continue to keep forming new highs as a result. Now, because of this economic downturns, or anything that happens which is point in time, with whatever is happening globally or locally, if there's any uncertainty that's happened because of external factors, there might be a small blip, but in no form or shape you can say that it's a large correction with 15-20%, where the stock markets are down right now, and you're like, okay, this is a great time to buy. Is it 20%? Markets are already down, and if you look at the overall stock market, it's probably has had a correction already of 20% in January.
Yeah.
I'm looking at the index level, not individual stocks. But does that mean is it time to buy right now? Stock, probably. Some people might do it now. Some people might wait for it to fall further and before they buy. But in property, you can't see that in Australia quite easily. That thing at all. That has it fallen 20% right now since it's high? No, it hasn't. Right? It doesn't work like that. So the thing that works against it, because you don't see that number fluctuating every single hour or day, property has the strength to absorb that because it fundamentally works very differently to stocks.
Thank you. Let's talk a little bit about the main topic for the live session today regarding US tariffs and how you see that impacts the Australian property market and what's really driving the market from that context, because it's a very topical topic really to talk on.
Yes. I have been trying to read through a lot of the information that's out there because it is still unfolding right now. The tariffs have just come in. So just for everyone, those who probably are still living under the rock, I guess, after the elections and during the campaign in the US, we had Donald Trump talk about, of course, him imposing these different tariffs around in the country and around the globe, essentially for any imports that they would do. So they basically want to, make America great. So they want people to actually use more local products. So they have imposed a lot of tariffs right now around the globe for other countries for them exporting into US. And the percentage at which those tariffs apply also varies across different Asian countries. So, for example, China, if anything that's getting imported from China, that's going to have about 54%, and anything that goes from Australia to the US, it's 10% right now. And again, even within the countries like Thailand, Malaysia, Vietnam, Cambodia, the tariffs are double digit, and they're anything from 20% to even 54%. So a lot of disparity in these different tariffs for different countries that have been implied, including India for that matter. So what that means is that obviously the manufacturers or people, the companies that are actually exporting this from those countries into the US, which consider that as a major market, there is an impact to those local countries essentially, and they will see an impact over a period of time unless the governments intervene. As far as Australia is concerned, because for us, it's not about what we're exporting to the US, but it's also the impact that China will face of 54% tariff that we're talking about importing into US. So if China is impacted, that does impact Australia because majority of our exports are going to China as well as a trading partner. So that's a watch item at this stage, right? What China will do as a result of this, is yet to be seen how they're going to come out of this. It does obviously make the dollar weaker for us as well. But at the same time, I'm not an economist, but I'm talking to what I've read so far and how I think things will pan out. But I do think that based on any such global major events that happen around, previously looking at what happens, I think governments will intervene. I think RBA should be able to cut rates faster now, essentially, as a result, knowing that this is happening, so that people can come into more comfortable positions with their debts as such. So if cash rates are being cut, and maybe analysts are already predicting that maybe there are 3 or 4 cuts in the rest of the 24-25, which is great for people to continue to keep borrowing and then buy properties and invest if they want to invest. But um, and I think once the government is elected at federal level, they will do something as well for them to continue to keep afloat and avoid recession as such in Australia.
Yeah, and recession itself is like a very technical term. So, what recession means from a technical definition versus the impact
Yeah.
at mom and dad's can be very different.
Yeah. Look, I mean, right now everything is unfolding as we're talking.
Mm.
This is really the very first day since
Yeah.
this has gone. The tariffs have been applied, so it's very early to say what's really going to happen.
Mm.
I'm really basing this off, with my own historical experience in Australia, but also at the
Mm.
same time, what the analysts are talking through on the ground. By
Mm.
no means I'm an economist, but I think there's a good confidence that, because we are a nation in Australia which is really strong financially, we should be able to weather this as well.
Mm.
Yet, being a global impact around all countries, it is yet to be seen what happens over the next quarter or so, before this can even shape up the right way. But that shouldn't, in my opinion, shouldn't stop anyone doing what they have to do with property, because ultimately, property is a long-term game. So if there is a position to be taken right now, there are buyers who will back out because they want to wait. Then there's an opportunity already in the market to seize the right space, right property, because unlike other countries, we are blessed with having good markets to invest in for growth.
And do you see that again? It's a unfolding situation, but the trends of deglobalization will be also good for Australia because manufacturing can come alive within Australia in some ways, and maybe the other countries might be looking at the same thing. So our exports of mining and all the required materials will take off.
Yeah, a bit early to say all that, Puru, because I think without the support of the government and the money that is needed to make those fundamental shifts into, producing something new in Australia is going to take a lot, which I think what we really need right now is we need a stable government. We need a government with a clear vision and clear plan. And we need someone who can, really see this as an opportunity right now to position Australia the right way.
Yep.
But both parties are still in the campaign right now, so we really don't know who comes next. But I think my view would be that, um, in in every form or shape, if we can avoid recession, that's the best thing for it to happen. We may not, the GDP might not grow as much as it is planned or projected, but
Hmm.
overall, if we stay afloat, and people have the jobs to do what they are doing, I think that's a good outcome.
Absolutely. No, thank you. I think the time always flies on these calls. I realize it's another 5, 7 minutes left. So I want to talk specifically about Victoria as well, because
Yeah.
that's our home ground. But how do you see the different markets shaping up in Victoria, especially for home buyers and
Yeah.
investors, both residential, commercial, actually?
Yes. So residential, of course, I mean, home buyers have been active, probably over the last 6 to 8 months, but now even more because people can borrow. Investors were not in Victoria at all over the last nearly 12 to 15 months. In fact, we exited Victoria market almost 2.5 years ago, just before Dan Andrews left. So all those new rules that came in and new, they implied more taxes on your investment properties. So we knew we had to exit, so which we did at the right time. And now that we know that Victoria was starting to brew up the right way. So we started to buy in Victoria about close to about 4.5 months ago, 5 months,
Mm. Mm.
just before anyone else was even about to enter. And that's because I think it's seeing what's coming and trying to make that work more fundamentally. So I'm a fundamentalist. Yes, we use AI, we use tools, we use data to really, look at that as a guideline. But I think just reading through the news and keeping abreast with what's going on at different layers of government can really give you good insights to formulate a view on exactly which state to buy, which areas to buy, what to do. So now we are seeing the markets are going a lot more stronger. As I said earlier, the days on market are reducing as auctions are getting a bit more stronger. Offers are getting stronger as well. So what makes the market is the seller and the buyer. So I think the right type of properties are coming to the market slowly, but it is coming. There are many areas in Melbourne that are yet to take off because there may be abundance of supply in those areas, and abundance of listing that has been sitting on the market for a while. So it'll take some time before the market will absorb all of that. But I think we are in the right direction as far as Victoria is concerned, which is upwards. There might be a bit of a turbulence because of whatever is going on with US tariff right now, but that's a very short term, and I don't think it's going to have that detrimental impact on property in Australia.
Okay, and what's the trend you see from commercial investments perspective?
Commercial, have to be careful with what you end up doing because we do a lot of retail style type of investments, but if you don't have multi-tenancies, that could be a problem within the retail right now. As a line solely on single tenancy could be a problem, but overall there are incentives right now with stamp duty benefits within commercial as well. So I think there's an opportunity for people to see the commercial in the right light, get into positive cash flow type properties, and buy the right thing. I was looking at a deal right now earlier this morning. So something that was available for about about 1.1 million sort of price point. Good 700 square meter block. You had big large building with 3 tenants in there in Victoria, and the rent was close to around the net yields were around close to 7% on that. So I think there was a very stable tendencies going over there and very independent building, old but independent building. And it was absolutely a cracker deal to look at as an opportunity for someone to grab deals like that where you've got multi-tenancies, line size, you're not buying into any strata, you've got opportunities to seize that on good areas, locations. Then knowing that markets will go up, interest rates are going down, commercial always does very well when that happens because the strength of the businesses goes stronger when RBA reduces rates, so interest rates are down. And that basically means that a lot of businesses are able to lease out for longer term, which basically means that you're strengthening the position of the asset, and that helps in growth whilst obviously the rental is positively get.
Thank you. I think we are closing to half an hour mark, and we'll wrap it up there. But as a parting note, um, if I have to look at again my favorite segments of first time home buyers or investors versus people who are looking at maybe scaling their portfolio from one or two properties to third or fourth, and then astute investors, because all three look at these trends in very different ways. So, what are the key messages for all three different segments based
Yeah, I
on
think,
the?
yeah, thank you for that question because I think what I believe is that you need to be really strong in your position as far as your finance is concerned, right? This is not the time to overplay and just keep holding on properties right now with as much as you want. You really have to play the game very skillfully and have the right strategy around what you need to do, because the money that is available right now to you, either in cash or your savings or your incomes that are there, you've got to be spending that very wisely. So if you, let's say someone's renting, and should they buy right now or should they invest, and if someone's not sure about that, just get a professional around you, speak to someone who can help and guide you the right way, rather than just trying out something on right now in the market, because markets are buoyant at this stage. There are a lot of markets that are not doing well, And with this uncertainty, with whatever is happening globally, this will have some impact in those areas. So you have to be very careful what you end up choosing. So I think do your numbers, talk to the right professionals, and with that guide, you should be able to measure your risk the right way and then take this step forward.
Yep. And in self-managed super funds, I spoke to a few people because of the share market downfall. Of course, it's a thing which will bounce back, but it
Yeah.
really puts them into a position where if everything is in shares, they are feeling the heat right now. So again, it's a compliant product, self-managed super fund. Talk to your brokers, accountants, financial planning advisors, and look at diversifying. That's definitely what I feel. Otherwise, too much investment in one type of asset class is a risk in itself.
Yeah, absolutely. And we've been shouting that over our lungs over the last 6 years that diversify as much as you can. And I'm sure everyone else understands that. It's just more about whom to talk to, and what sort of guidance to really follow. That's where people sort of get stumbled upon. Some people are going and doing things on solo without any guidance. So I think that's the most dangerous path to take right now.
Hmm.
So having right professionals who understand markets, who understand, finances, and there are right people in the market to help you out, right? It's just about reaching out and just having that conversation. It can absolutely change your understanding of how things work and really what's right for their situation as well. So whilst we're not financial planners or accountants or brokers, but we have access to the right people in our business, so we are in the right position to be able to guide someone and give them the right and direction to go to the right contact if they don't know who to speak to, and who can help them. So I'm more than happy to, if you want to book a consultation with us, on findmyrealestate.com.au, and go and book a consultation on our website. And if we need to help you and farm you out to different people and you need help with that, we can do that as well. So in these uncertain time frames, all we can do is try to embrace this, stay with you, and just ensure that people are, at least they have someone to go to whom they can at least put their hand up and talk freely without being judged.
Thank you so much. And to all our viewers, that's a good night from me. And see you next Monday.
Thank you so much. Thank you for having me, Guru. Cheers.